Hello, this is Sonia Luna, CEO and founder of Aviva Spectrum, and I wanted to talk to you today about the 280E tax consequences in not getting your bookkeeping right. In other words, what are the 5 best tips I would want you to leave with to lower your taxes? Most people know the history of 280E. It was enacted by Congress, and essentially it said, look, if you are going to do an illegal activity at the federal level, only the cost of goods sold are allowed to be deducted. Okay, but there are some exceptions to that rule when it comes to allocating certain expenses. Now I'm going to cover them here today. Let's take a look at organizational chart number 1. Here we have company A, and they sell both retail items in the cannabis space like smoking accessories, t-shirts, snacks, drinks, etc. And then they do the retail quote-unquote care services, right? Which the IRS is saying, look, really, if it's related to the cost of goods sold or the storage of it and some of the inventory or point of sale systems, you can deduct those as part of the cost of goods sold. And the tax evaluation from the IRS perspective is the entire entity, because the company created one legal entity to do 2 different service lines. Now, let's take a look at option 2. Here we have company A and we have company B. They're both legal entities owned by, let's say, the same type of owners. Now, company A deals with the retail, smoking, accessories, t-shirts, etc. Company B deals with that care part of the process. Okay, so the cost of goods sold, storage, etc. are all in alignment. Here's a secret that most people in accounting rarely discuss with their clients when it comes to bookkeeping tips and tricks. One, we know that the IRS is now going to review 2 entities. Okay, so you do have kind of a target on your back. However, there's a concept called shared services agreements. Publicly traded companies use this all the time to shift tax burden between different companies. So imagine it's an agreement between company A and company B about certain services. So company A could have people helping company B with the storage, the inventory costs, etc. And it's an agreement between those 2 companies. The goal with the shared services agreement is, again, to shift some of those cost burdens, let's say from company A into the cost of goods sold where it should be until 280E gets revamped. This is a major tax strategy that you can think through with your tax professional and also your bookkeeping consultants. Now let's take a look at some other options. In terms of the 280E, most of us know that the IRS is looking for sources of revenue. And given the current administration, I wanted to leave you some key thoughts. One, you should really consider getting some great accounting software to track all those expenses and how you're treating them. So I would highly encourage you to check out our YouTube channel, and I have the 2017 Best Cannabis Accounting Software, and I go through the model of what are the criteria for you to consider. Now, one is your corporate structure. If you choose a CS or a limited liability corp, it's extremely important that you have a bookkeeper that understands not only the tax structure, but also the bookkeeping purposes of each one. So going back to my earlier example in company A, where it had everything in that one entity, if you mess up and you, let's say, have a limited liability or an S corp, it comes down to you personally. Okay, if you choose a C corp, okay, it stays at that corporation level, right? If there's any tax penalties, etc. 2, innovate your business and your bookkeeping. In other words, don't think through of just today, but think about the future of where the cannabis industry is actually headed. Some of it is going to be what's called a subscription-based revenue model. What does that mean? Your customers, if you know them extremely well, you create a certain loyalty program. So innovating your business to have that type of continuous revenue is critical in a market where it's kind of a dog-eat-dog world right now. 3rd is try to find the best allocation models. I already showed you one example, which is 2 different companies, shared services agreement. There are other allocation models where they're using different tax and accounting strategies to shift those costs into cost of goods sold. The fourth is make sure you're picking the right accounting software for both the IRS purposes, but remember, you're also keeping a couple of sets of books, and also for investors who want to invest in your company down the road. Most people do have some sort of exit strategy, and if your exit strategy is down the road, no worries, but having the right accounting software package is going to allow you to present yourself to critical either bankers, investors, and sometimes even just getting new partners on board. Let's say you want to expand the business with a partner. Fifth, be audit ready. The IRS, again, has a certain target audience that they're thinking through, and this particular industry happens to be one of the hottest sought out audit areas. Those are my key thoughts, and I'll leave you with a final word. Now, most of you may not have known me in the accounting or auditing industry. I actually served for what I would call the small guy. I was an appointed advisor to Mary Jo White. She was the chair of the Securities Exchange Commission, and I used to fly out every quarter to basically fight for the small guy, the smaller and emerging companies. And my input was based on my accounting and auditing and compliance experience. I am an active California CPA in good standing. And I wanted to offer to some of you this accounting software analysis that we have developed internally, given our over 20 years of experience in dealing with accounting software and auditing accounting software. It's an analysis where you would have a free diagnostic with me. We would do an intake. It takes approximately 45 minutes about what's going on in the business, how the data is coming in and out of the business. We would internally at Aviva Spectrum with me and my team do an accounting review. Okay, what is the best fit given your current state and then your future state? And then we would give you a customized report. Again, this is all free, and you would have to email us at info@avivaspectrum.com, but with the subject in it saying accounting software analysis in the subject header. I only offer this 2 times a month. Because again, it is with me personally to get this type of analysis completed. I know a lot of you have choices out there with CPA firms, tax firms, etc. I just hope that when you do select some of your choices that you include Aviva Spectrum in that selection process. Thank you and have a great day.